Good evening, everybody. Okay, I'm going to kind of orient this toward which option trades should we be looking at. And so that's kind of going to be our segue into on Saturday, October 29th. It's going to be a cold, rainy, terrible day, so you want to sit inside. And but we're going to be going through a lot of different evaluations of what option strategies do you use when the market's here or here or here, here or here. And that's where we're going to kind of use a combination of uh, calls and puts, calls and put spreads, and then or debit spreads and then credit spreads. So when we use the psychology of what the Japanese rice traders have illustrated to us as far as what does normal human nature do? Where do most people sell? They panic sell at the bottom. Now, this is why utilizing candlestick charts is much more effective and much more provides much more clarity versus trying to figure out ourselves what should happen in the market. And I have to remind myself of this even after 45 years of trading, that when they gapped down today, that was on the news that the CPI was still showing we're having inflation still running pretty well, and they gapped down. And I've always known to get ready for a buy signal. And I was telling the chat room today, I think I got on the phone I was arguing with one of my bankers, um, and we were trying to get some information back and forth to each other for 45 minutes. And so finally, at the end of the conversation, he said, "Well, what do you think the market's going to do from here?" And I said, "Well, they've gapped it down, and it doesn't look good based on that. If this downtrend is caused by the current policies of the administration and they're not changing it, it's probably going to stay down." And I clicked on the charts, and they were up. No, Darren and I had some stops in place. Um, they When I looked, the market was up 500 points at that time, and I'm thinking, mercy sakes. So the quandary at that point was inflation is still heading up. Oh, uh, I wish if I had a lot of money, Darren, I'd sit up all night and watch it. I uh, Now I forget what I was saying. Oh, so the fact that they gapped it down told us that we were probably should start watching for a reversal. And obviously, in that 45-minute conversation when I wasn't paying attention, they did reverse the market. So this is a long dissertation to say we don't have to know why they were buying today. I mean, I wouldn't be able to figure out, with inflation still positive, nothing changing, why the heck were they buying like crazy. So this is a bullish belt hold. Yeah, you wouldn't call it a belt hold, but it can fit into that parameter. Call it a bullish left-right combo, which is a bullish engulfing after a doji. Uh, I think I know why earnings. It could be earnings, but I would guess, nah, I don't even want to speculate. I would guess some of the earnings are going to be good, but they might not be sustainable. That there might be a lot of outlooks that are negative from here. So, how strong is this signal? SP, that's what we're going to go through tonight, of what all the parameters or what all the ramifications are of a signal like this. So, first of all, when we do see a signal, or there's a few people I saw today where they said they took profits on the open, which was good. Does this price pattern indicate a reversal? Yeah, that's what Ronald. We're going to go walk through all these this to identify or analyze what should be happening from here. So again, there's a left-right combo. So where would be a logical place if you were short NVIDIA today? Where would be a good place to take profits? Well, if you're real nimble and they gapped it down in the oversold area and you started seeing it trade positive, you might start taking some profits. When they came back up through the previous day's close, obviously you could see there was a bullish candle forming. Where do you think it might be going to if they're buying down here? Probably back up to test the T-line. So you might take profits or you have a stop set at the previous day's close. Now that's more difficult. Well, you have to be a little bit more nimble and be watching to see what you want to do at this point. But again, the reason you'd be watching is because of that simple, not simple, but that truism that the Japanese race traders have illustrated for us. That if you see something gap down in the oversold area at the end of a downtrend, get ready to start or looking for a reversal signal. Now that one, you had to be nimble and kind of analyze that that might be the case. Whereas our short on ALT, we knew the probabilities were starting to go the other way with being in the oversold area, and they bounced off the 200, did another doji off the 200, and then when they started trading positive today, what should be the logical assessment of what's going on right here? That the bulls are stepping in at this level, just because we know what happens with a doji, and then bullish trading. That's where you start thinking, well, I better be ready to take profits if this starts trading positive, only because of what the signals are telling us in the oversold area at a level that everybody else is watching. I have to point out this out. On the 5-minute chart at 9:30 today, isn't that a left-right combo? On what? Which entity, Darren? It's all how they interpret the news and its perception. That's what drives that. Walter, that's exactly right. So that's the reason why, if you know the different trading rules, again, that if you see a gap down in the oversold area, excuse me, get ready or be a lot more prepared. And this is the whole point of candlestick analysis. If you know what human nature normally does, it allows you to be mentally prepared or alerted to what you should be doing. And that's I guess the most important concept of knowing what human nature does and what type of signals and patterns we should be looking for. Do you think short covering had anything to cause the rise today? Gary, probably, but that's going too far into the analysis. It doesn't matter what caused the buying today. all we could see graphically was that there was buying here. And if we could see there was buying here, and we already are mentally prepared that if they gap down in the oversold area, get ready for a reversal signal, that means we can be much more aggressive or act a lot quicker as far as covering trades. Now, there's also, and this is, I was pointing this out, that this right here might have a different, excuse me, I still got a frog in my throat here. This right here might have a much different options trading strategy, being in this part of a trend and seeing the failure at the T line. This might also have a different option strategy, seeing the bearish best friend. We might not be buying puts here. We might be buying put spreads, or if we're getting very close to expiration, we might be looking at credit spreads. It all depends on each person's, what do I say, risk nature. So there are charts that even though the market reversed, the magnitude of the sell signal, like a bearish flutter kicker signal in Etsy, you can see what happened here. Instead of this opening and trading higher, this opened and continued to trade lower. Whereas something like PayPal, we could see that when they gapped it down, we could see exactly what was happening as soon as it opened. As soon as they started trading positive, what color was this candle? It was green. We could immediately identify, whoops, they might be buying down here. That if I was short and they had gapped it down, maybe I start covering at least half the position. And then maybe up here I've covered the other half. Well, I got out of, let's say, on an average price at this level. But what I really want to stress is the fact that we know what should happen based upon where gaps are occurring at specific areas of a trend. It also allows us to be prepared for identifying what we want to do next based upon a price pattern. If this is our resistance level that is obvious, and we're seeing a J-hook pattern, and we know what our expectations are of wave 3, going to be the same as wave 1, what's that tell us that we should be watching for on positive trading? We should be watching to see if wave 3 comes up through this level. If it does come up through this level, whoops. If it does come up through this level, what can we expect as far as a pattern? That J-hook pattern. What can we expect from everybody else watching this price move? Well, there's probably a lot of people are watching to see if they can break out through the resistance level. We just have a little bit more confidence and aggressiveness to be buying, knowing that once it does break out through this level, going into wave 3, that the buying is going to be based on everybody else seeing that it's broken out through that resistance area. On PayPal, let's see. Whoops. Well, what happens, Carrie, I'll show what to do when we see something like this and it starts trading positive. In a minute here, we'll go to the live charts. But what I want to kind of illustrate is that if at this point, I think we were in the bearish spreads. And the reason we were in the bearish spreads is because it already had moved. We wanted to see if it was going to break this level. But was that the best place to be buying puts? No, buying puts was up here. Down here, the risk factor kind of leans toward having a put spread on versus a put. So when we look at a chart like this, Domino's Pizza. There's our best friend signal. Now, what was relevant about this best friend signal today? Got to remember, the market opened up. The Dow opened up down 560 points. And this opened positive and started trading positive. What'd that tell us about the strength of this signal? That they were buying in spite of the fact that the market was getting cratered on the open. Whoops. Did I not scroll? So this is what we're going to be doing next, not this Saturday, next Saturday. What would be the strategy right here? Should we be buying calls, call debit spreads, selling a put credit spread? That's what we're going to go through. People like pizza. That is right. That always reminds me of the guy that runs up to the taxi cab and said, "Hey, can you fit 2 pizzas and a 6-pack of beer in your back seat?" And the cab said, "Why, sure." He goes, "Blah." Anyways, that's what I tell my Sandy's grandkids. So this is what we want to be ready to a Bert. This is a tough crowd. This is what we want to analyze tomorrow. How does the market, what do we do based upon how this market opens? That's what gets us mentally prepared. So this is going to get us, first of all, when we know what to analyze or what to expect after a candlestick signal, and be mentally prepared. And if we want to trade options, that's what we're going to be going through on the 29th, is the what we call the Saturday Spotlight. This will be a full day training. Phil, we'll get to that. I'm going to go to the live charts here in a second. A full day training. We start at 10. We're supposed to end at 2, but these usually go to 4, even 5 o'clock in the afternoon. So our mantra is you're going to get a heck of a lot more information than you expect. But the reason we do this is when we keep going through the repetition of knowing what to do based upon seeing which trade setups are forming, at least now we don't have to spend all night sitting to figure out what to do. We know what would be the best strategies at different points of a candlestick reversal signal. Let's see, today I bought, and then 45 minutes later I got stopped out with 50% loss. Okay. Thought I did everything right with the candlestick signal. What went wrong? All right, Rob, let's pull up the live charts. Anyways, join us. These aren't very expensive, and you get a heck of a lot more information than you think you're going to get. But the important factor is if you can put the correct option trade strategy with the appropriate candlestick signals, now you're prepared. Now you've got a much bigger advantage of knowing when to get in, what strategy to get in, and when to get back out. So let's go back to the live charts. All right, so this is the this is the YMs. This is the futures after hours. You can see right now they're selling off a little bit. So here's all the things that we have to take into consideration when we're looking at a candlestick chart. Is not only what is the signals telling us, but what is the normal reaction or the normal price move. Obviously, on a big, huge move like this, again, the question is this a belt hold bullish engulfing? Not necessarily. I mean, it is a bullish signal, and it's on the fringe of being a belt hold. But no matter what, is the class available for replay? Yes. Boyd, it'll be recorded, and then everybody that shows up, or if you can't stay all day long, you'll get the recording that you can keep going through. So where was I? Oh, so it doesn't matter whether you call this a belt hold bullish engulfing. What we really want to see is that it is a bullish engulfing left-right combo. Now, remember, the left-right combo is a very significant reversal signal. We would indicate that this also coming off a double bottom tells us this is where they're starting to buy. What is a belt hold? We'll show you, Raju. Does anybody remember a belt hold recently that we can show Raju? All right, so do we just take it for granted that the markets are reversed because the Dow has traded up? No, not necessarily. The NASDAQ. Now that's getting closer to a belt hold. A belt hold is when they gap way down or up out of, in this case, down, trading range. And then it immediately starts coming back up. It's called a belt hold because the Japanese rice traders illustrated as two wrestlers wrestling. One's trying to back out of the ring, the other one's grabbing his belt and pulling him back in. In this case, SD, most of the time, a left-right combo does not need confirmation. However, there's one more element about today's trading. It was huge, up big. And you can see that the NASDAQ did not close above the T-line. The S&P 500 did. And notice where this left-right combo occurred. Right here. So you've got the prospects of a double bottom. And again, the Dow also did a double bottom right here with a left-right combo. So the assumption is that this should be a bullish confirmation. All right, so if you go to the, so here's I'm going to take it. Darren, hold on for a second now. So anyways, well, belt hold needs to close above the T-line. No, not necessarily. The belt hold is the signal. Then you want to see bullish confirmation after that, and then the T-line will become a factor. The T-line is the 8 exponential moving average. Let's dig into more aspects of the T-line. John, the T-line is, we call it the T-line, the trigger line, because it has a very simple concept to it. It acts like a natural support and resistance level of human nature. Why? I have no idea why. It just does. So if the candlestick signal is the graphic depiction of investor sentiment, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely high probability trend analysis combination. So notice our bearish kicker type signal up here, failed the 50, closed below the T-line. Simple rule. If you see a candlestick sell signal and a close below the T line, you can stay short until you see a candlestick buy signal and a close above the T line. Conversely, if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. With a caveat that the further away you move from the T line, the higher the probability it's going to come back up and test it. So if this all of a sudden moved down here and the T line was up here and you saw a reversal signal, that would be a good time to take profits, because where was your next move? Up to the T line. Now here's another part of this analysis. Remember, you can stay short until you see a candlestick buy signal and a close above the T line. However, the bright green line, this is the 3T line, which works in conjunction with the T line. And it works well when you start moving too far away from the T line. Audio and video has stopped. Is that the case with everybody? Carol, oops. Can somebody type in for Carol to that she might have to click on the red X in the circle up in the top right and come back in again. So here's another fine tune of analysis. Right here. This is not a signal. It's not a bullish engulfing. It's not a bullish harami. It's just an up day and a downtrend. So what does that tell us? That any buying from here is probably not going to have the same strength or magnitude of strength as if this had been a reversal signal. Why? Because the Japanese rice traders have had 400 years of identifying the signals and telling us what they mean. Bearish kicker signal. They'll explain what that is. If this was a signal, they would have told us what it is. But the fact that there is no definition of what this move is, that means their analysis over 400 years has told us that this is not a signal, that it really doesn't mean anything. So what do we assume from that? That the uptrend may be working, but not with the same magnitude of strength as if that had been a full-fledged reversal signal. Okay. Now, there were some other questions I was going to answer. So now what do we have? We've got the left-right combo. We've got a double bottom. So this is the signal at the same level this non-signal occurred. But what did this non-signal indicate? That there was some buying going on here. This is now a signal that tells us that could be your reversal based upon how it opens tomorrow. Now, when I say based upon how it opens tomorrow, now what are we looking for? A candlestick buy signal with bullish confirmation. So what is our mental preparedness telling us? Well, if this opens lower and starts trading down, this hasn't confirmed. That means we have to still be careful and not do any aggressive buying. Let's say it opened here tomorrow and closed down here. When would we be buying? If it came back up the next day or the next couple of days through this level, confirming that signal. Why would that be something to watch for? Because obviously we had a 1,500 point swing on a strong day. There might be some profit taking. Then we have to see whether, you don't want to see it go back below. If it opened here and closed back below the T line, what's that tell us? The bears are still in control. This may have just been a short covering pop. Okay. Another element or another indicator is also the HYG. Now that you could probably put more into a category of a belt hold. They gapped way down and it came back up into the trading range. Now a belt hold is the fact that they've gapped it way down below the trading range. It could come back up and close here. Wouldn't be a signal, but it would still be a belt hold indication. You would want to see bullish confirmation. It could close more, let's say more than halfway up the previous candle, becoming a piercing signal. Or it could close above the previous day's body and become a bullish engulfing. So just the fact that they gapped it down and you could see the bulls are coming back in, that gives you different classifications of the strength of that signal. So this is the HYG. This is the corporate bond index, which is another indicator that if they like stocks, then they're not afraid to be buying their corporate bonds. So it's an additional indicator, I think, that Johnny showed us one night. Okay, so let's take a run of your entry strategies. Whoops. I'm going to go back to the S&P 500 that gapped down. And so Darren wants to take a look at the 5-minute chart. So there was your 5-minute chart. The gap down here. Then you can see there's a little bit of buying. Now I usually play with the 10-minute chart. Came down here. Look how far away we are from the T-line. Now if this had come up and started rolling over, that would have told us that they aren't buying just yet. The fact that they came right back up to the T-line and pulled back, said, oh, maybe they aren't taking it up. But then the next 10-minute candle took it back up. And then what type of little pattern did we have? There's our J-hook pattern on the 10-minute chart taking us up through the T-line. And then as you can see, they were buying after that. So what did this kind of alert us to, especially when it came up through here? That when they do a gap down in the oversold area, start watching for a bullish reversal. Now that bullish reversal may not have happened today or the next day, but at some point, that's where they sold in the oversold condition. Now, I'm going through all this in kind of greater detail because this is all the things that you can glean from knowing what the candlestick signals look like as far as reversal signals and when they occur. The reason we go over this time and time again is so that when it sinks into everybody's head and I say this because I had to learn the hard way, that if I had been short and they gapped down, I was probably just happier than a pig in doo-doo, making great money, and it's going to go, wait a minute, what's happening? What's happening? I didn't understand what was happening. But as soon as I learned candlestick analysis, it said, well, when they gap down in the oversold area, the Japanese rice traders say that's what that's the area to start looking for a buy signal. Okay, so with that, whoops, kind of the same scenario. What is that? That's, oh, what chart am I on now? Did I? Next. I don't know what I'm looking at here. Oh, I know what I was looking at. We were going to get ready to short this one, but when it gapped down and didn't do any movement and then started trading positive, that would have kept us out of going short. Because what were we expecting from this pattern? Wave 1, wave 2, going into wave 3 of a bearish J-hook pattern. Except as the market opened lower and everything started trading up, what did we do? We see a green candle tells us there's buying. So where's our entry at this point? Well, if it traded up and then came back down through this level, that's when you could short it. This kept us out of a bad trade. So that's part of that entry strategy where you can stay out of bad trades based upon, even if I had shorted this down here, I don't think I would have, with the market immediately starting trading back up after it opened. Nothing is happening. No audio, no more video 5 minutes after I sign up. Oh boy. Oh, Carol, go to the very top of your screen and make sure on the very top row that you're in screen sharing. Whoops, she can't hear me, can she? Oh, Becky, can you type in for Carol for her to go up to the top row and make sure she's in screen sharing, and then go to her icon just below the list of names where the speaker icon is, and make sure she's got that on. So anyways, this one didn't execute today because they started trading positive. Where would we have entered this one? Whoops. Come on. If it opened, started trading up, but came back down through the open, that means that pattern was still working. And AIN was a little bit more clear that as soon as they opened it, because there's your bearish kicker signal, open lower, but when it immediately started trading positive, told us, up there's buying here. We want to be selling. So if it traded up, where was our entry to go short? If it came back down through the open. All right, so there is a benefit that every position that we have on in a bear market may not be bearish. We could see the pattern setting up on our recommendation yesterday at METC. You could see the J-hook pattern setting up. And then today, obviously, that J-hook pattern got additional confirmation because of the bullish trading. Sting, another one where you could start seeing that it broke out yesterday. I think it closed higher today. But another one where that whole sector was being bought. And INSW. There was your Morningstar. We started buying in here, where that was where your buy signals were. And then you can see where it kind of broke out through this level. And that breakout today was based upon after they opened the market, traded higher. So the reason I'm pointing these out is we weren't long very many positions, but when the market was drastically oversold and you're seeing some buying, instead of having all your positions short, you still probably want to have a few that are long just in case that reversal does come into play. An INBX, there's your fry pan bottom breakout. There's your 45 degree. So notice what this one was doing over the past few days. Even when the markets themselves were heading in this direction. This is why I constantly try to point out the fact that the candlestick patterns and signals tell you a much different story than just what the overall market trend is telling you. I'm going to go through some of these real quick. Here's another one that's still producing a good buy setup. This is Skechers. Now a J-hook pattern after your bullish flutter kicker signal. Square was one that we were going to go short. And we got ready to, but it was trading as a doji down here most of the day, or in the early part of the day, which would have been a good bearish signal because look where it opened. It opened down here and doing a doji. What did that set us up for? But if it closed as a doji and it opened lower tomorrow, what do we have? A bearish flutter kicker signal continuing this wave to the downside. All right, so here's the what you have to kind of analyze. This one was a good downtrend, Daku, and then it did a bullish left-right combo today. So what do we know about our probability factors? 1, we were in the oversold area. 2, no matter what the reason for the market going up today, whether it's short covering or there's another dynamic out there in the markets that we're not aware of just yet, what's the probabilities? The probabilities are you probably don't want to be short on a strong candlestick buy signal in the oversold area. Where do you think your first logical target is going to be? Probably at least back up to the T line, which means you don't want to be sitting here knowing that that's your first target. Then if you're short, you don't know whether it's going to go through or fail, but the probabilities told us, well, we should be out of that short position. Let's see what happens from here. Same thing with Splunk. Again, the fact that they gapped it down in the oversold area and started bringing it back up, this is where you can at least set logical stops. Could have been at the previous day's close, or especially at the previous day's open. Because logic says if you open lower and came back up through this level, that's showing a lot of bullish strength for being in a downtrend. Where do you think the next likely target is going to be after a bullish engulfing in the oversold area? At least a pop back up to the T-line. Now, does this mean there's a major reversal? We don't know. At least we know the probabilities are they're going to bring it up to this level. Then we'll have to see what happens at that point. So all we're really identifying is where did our probabilities change? Again, we're in the oversold area and you're starting to see buy signals. That's where you start saying, all right, let's close this trade out. We don't know what's happening. And at least have those funds available for the next best analysis from here. So here's the, I guess, mentally prepared strategies. Left-right combo. It looked like this one, which had been a good short, there's your bearish flutter kicker signal. It might hover up here and may go positive, or if it came up and failed, or even failed from here. It told us this was just a bounce. The buy signal didn't confirm. We can now reestablish a short position. Whoop, we're going to be way over time tonight. Same scenario, and SYNE, there's your bearish best friend. There's your left-right combo. Take profits, close out the trade. Now, the biggies also had these type of signals and patterns. As you can see, ever since the little bearish, excuse me, J-hook pattern. So what was the logic of this short trade? There's your bearish J-hook pattern that if it went through this level, what'd that tell us? Now we're in the next wave to the downside. What did this tell us? The probabilities of being in the oversold area, doing a left-right combo, said let's take our profits here, and let's see if they're what they do after they bounce it up a little bit. Netflix now fits into the category of a nothing chart. If you shorted yesterday and then it opened down here, oh boy, the short was working. Where should it not trade? Probably didn't want to see it come back up through there because that would be 2 green candles forming right in this area. An Apple, same thing. Big left-right combo. Opens down here. If it opened down here, we know as soon as we see a gap down in the oversold area, where do we not want to see it trade? Probably back up into this range. Because if it comes back up through there, what's that telling us? They're back in this range. It's not in a downtrend anymore. Close out the position. And Amazon, kind of the same thing. Doji, belt hold, signal, stochastics heading up. If we'd been short, where would have been a good place to cover some or take some profits? Well, if it opened here and traded down here, as soon as it came back up through this level, knowing that after it gapped down, start looking for potential buy signal, it may have taken some off right here. So if I took off half the trade here and then closed the other half here, at least I got out in that type of range. Okay, so with that, if the market is turning, now let's go back to the Dow again. 2 things to look forward to or look for. Let me go back here real quick, Henry. This one, no, Henry, there's nothing to analyze on this one. You're still above the T line, you just stay long. And AKRO, same scenario. What's the T line telling you? They're still trading up above the T line. Do we want to see a higher low for a reversal of an overall trend? Do we want to see a higher low? A higher low. Ron, that is just one part of the assessment. Yeah, so if this started trading positive, what is our very simple parameter? As long as it's trading positive and staying above the T line, we have to assume that we're in an uptrend. So this is why it's going to be important to see how they open tomorrow, because if they open and they immediately start trading back down, that tells us this was just a one-day bounce. On the other hand, if they open it and start trading this way, that's confirming this signal. Now we have a different strategy. We can stay long as it doesn't close back below the T line. There's a gap to fill in the SPY that would fill about 7 points, which could happen tomorrow morning. The gap island reversal was filled today by the Dow. How do you look at the possibility of filling a gap and then reversing down again? Lost screen. Gary, can you hear us? Which one were you referring to as far as an island reversal? Oh, this little island reversal? Well, that basically told you that this non-signal was not showing the island of lost screen. Gary, Gary, go ahead, and if you can hear us, go up to that little red X circle in the top right hand of your screen, log out and log right back in. See if that doesn't give you a better connection. So this is where we want to figure out, all right, based upon how they open this, what option strategies we want to put in place? Well, first of all, if I'm still short some positions, and I'm going to, let's say, for example, Wayfair. Looks like it's basing, but nothing yet. So now I have at least a strategy that if it opens lower and starts trading lower, they're still trading lower. If this opens positive, I'm closing out the short spreads. I forgot what I was. There's your bullish kicker signal. So that's what I was going to do, is that if this opens positive tomorrow, what do we want to do? We want to start looking at the strong bullish signals. If it opens lower and trades lower, we want to see which bearish trades didn't get back up above the T line and are still selling off. Now, the T line is a very, very important indicator. And I stress very, because the probabilities are so strong that if you see a candlestick buy signal and a close above the T line, well, now what do we want to see in that candlestick buy signal? Bullish confirmation. That's what we want to see with any signal. So stop on diamond is at T line. On the diamond, whoops. Yes. If they opened and closed back below the T line, or even came back down, probably closed below the T line. So what would you want to see if it opened lower and started trading off? I'd want to see what happens when they get to the T line. Now, for any folks that are fairly new in here, the reason the T line is so relevant is there will be so many times where you see the trading right at the T line. Now, the reason that's relevant is nobody has the T line on their charts, which means when they move up to that level, which we have already signified with the T line, and it reverses, that means that was the natural support and resistance level of human nature that we've just been able to identify with the T line itself. So if they came back down on early trading tomorrow, then we watch to see what happens at the T line. If it hits the T line and bounces back up, then that told us that consolidation was merely consolidation back to the T line. DCT, kind of a scoop type pattern with your inverted hammer. That one is a good, viable, bullish trade on positive trading because of the scoop type pattern. Thank you, Gary. Let's see, Zim broke out. And where did it break out? Doji, 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 doji. When you see a series of dojis and then they tell you which way they're going, that series of dojis usually represents new strength in that price move. Walter, what's the question? Not on, but below the T line? Yeah, anything. It's not unusual, and even in a chart that looks like this, to see them open it lower, come right back to the T line and bounce back up. That just gives you added confidence that the consolidation was right at the level which is a natural support level. Yes, Halliburton, all of these, Schlumberger, J-hook patterns, ExxonMobil, J-hook. So here's another additional confirmation. If you see all the stocks, or a majority of the stocks in the sector, moving in the same direction, doing the same patterns, then you can pretty much assume that they're buying that whole sector across the board. So what do we want to do? We want to find the ones in that sector that have the strongest signals. Perry, you can talk to us right here. The charts I use are CQG, which I don't recommend because they're about $1,400 a month. I just use them because they're fast and we can go from chart to chart in these demonstrations. But your scanning softwares are, I think bar chart is free. I use Metastock, which is very good for scanning all markets, all the world markets as well as currencies and commodities. Then you've got TC2000, which is very good, but it's only oriented toward American stocks. Now, I forget what the prices of them are. They range anywhere from $35 a month to $97 a month, but they're much more efficient to do scanning a lot faster every night. What do you use for back testing? I don't need to back test, Kevin. I mean, we know what the patterns look like. Oh, Darren, there's 3 or 4 of them that go off whenever they want to. Yeah, Gary, but Thinkorswim software, you really have to spend a lot of time to get them set up. And I guess they're okay. But we've put out formulas for Thinkorswim, Ninja Trader, I think TradeStation. But remember, they're trading platforms. They're more interested in having the correct trade platform versus scanning softwares. So I always recommend if you're going to be trading a lot, spend the extra $30 or $60 a month for a scanning software. Okay, now I got off track again, didn't I? HQY. This is what we call observe the obvious. Let's make this a little bit smaller. Obviously, we're in an uptrend. And notice where the buy signals occurred. Right here, smack dab off the 50. Now we're back up. So what type of pattern is this illustrating? Well, there's your J-hook pattern. Where's your expected price move? Probably back up to the top of this channel. Where do you think your first target is? We want to see it get through this level. Well. What's happening here? Okay. All right, so we already, remember, once you learn your 12 major signals, you learn your patterns, then we've got another batch called the top rank signals and patterns. Number 1 on that list is your best friend signal, a doji, followed by a gap up. Usually produces extremely strong results. That's why we call it your best friend, because not only does it tell you the direction, but it tells you a very strong magnitude of that direction. And the third major factor of a best friend signal is they occur quite often. So the frequency works well. Yeah, JQ, I've been trying to get through to Fidelity to see if they need some of our formulas over there. AXSM, another gap up. This was more of a doji on some of the other charts, but anytime you see a candlestick signal followed by a gap up. There's your hammer gap up. That you put on your watch list to see how they open or trade this one tomorrow. And QDOW. Oops, where did all these lines come from? QDOW, there's your best friend signal. Pretty much right back up to that level. So what would we, what do we kind of assume? If this opens positive, there's your first target. And then because it's a best friend signal, still has the prospects of much more upside. Whoops, I forgot some of these there. Bigalow, J-hook pattern. These are all, oops, these are back over in the energy area. So here's the logic. That if this is a J-hook pattern, we can see how it's supported right off the 200 and the T-line. But if this does a wave 3, what's that telling us? That this level is going to be breached. Once that breaches, everybody else is going to start piling in, adding to the profitability. So we're always looking for the high probability trade setups. Same thing with FANG. J-hook pattern coming up through this level. The probabilities are wave 3 is now in progress. Same thing, yes, on that one. So again, an additional confirmation is if you have a whole sector that's producing those same signals, that means that whole sector is being bought across the board. The other high probability trade setups are your J-hook pattern that's further enhanced by a bobble breakout. And a bobble breakout is just a factor of seeing a J-hook pattern where you can see the defined resistance level and then the breakout through that resistance level, which also creates very high probabilities that when they see it come back up through this level, we can see it as a J-hook bobble breakout. Everybody else is watching to see whether it's getting through the through that resistance level. AHCO, there's kind of your fry pan bottom, breakout. And again, look at the fry pan bottom. Notice what it was doing over the last few days. It was still moving positive because the fry pan bottom is a pattern where the investor sentiment is building up in spite of what might be happening in the overall market conditions. So not only does a pattern give you a high probability of moving in the correct direction, but it's going to give you a much stronger movement. And if the market is going against you or turns against you, they usually will still continue to move in the same direction, at least giving you a little bit more time to get out of the trade versus getting slammed when the market itself might be selling off. So this is what we call a McMuffin. There's kind of your morning star signal. There's followed by a doji sandwich. Now we know that the morning star signal is one of your 12 major signals. Now the reason I point out 12 major signals is because out of the 50 or 60 candlestick signals, a lot of them don't even occur often enough to spend mental time and energy trying to learn them. The 12 major signals are the ones that are going to move the most. So morning star signal is one of those. What do we expect from a morning star signal? High probability a reversal has occurred. There's the doji sandwich. What do we expect after a doji sandwich? More upside. So you have a morning star signal followed by a doji sandwich. That's kind of a double whammy for telling you there's going to be more upside. Call that a doji sandwich McMuffin. That's your morning sandwich. OPI, same scenario. There's your morning star signal. There's your doji sandwich closing above the T line. that becomes a high probability trade setup. Okay, then on the short side, things that did not show any strength, again, after a strong sell signal, like a bearish flutter kicker signal, you can stay short. What the heck is that? That must have sold off right on the close, or it may have been trading up after hours. There's your kind of your bearish J-hook pattern. Look at all the dojis. There's your series of dojis. What's that telling us? They're probably going to move in the direction of how they open or out after this indecisive trading. Well, you can see they failed at the T line. So what do we expect from this pattern? Wave 1, wave 2, going into wave 3. Same scenario. Wave 1, wave 2. Look at all the dojis, indecisiveness. Then they told you which direction they're taking that decision. And IoT, another one that sold off hard. Why? Because look at your bearish flutter kicker signal. And they actually gapped down through this level. Now, had they come up and closed up here, that would have told us this would be acting as support. The fact that they stayed down here told us it's much more inclined to be heading lower. And rum, another dumpling top type situation. Whoops. Well, come on. So what's our trading strategy on this? If it opens lower, what do we got going on? A bearish doji sandwich coming out of a dumpling top. Much higher probability it's going to be selling off pretty hard. So right now, the futures are trading pretty flat after hours. The NAS or Dow would be up $4. So tomorrow, again, we've got to see how they open this. If they start trading this lower tomorrow, watch to see what happens at the T line. If they start trading positive, that's a good indication that that's still on the E-minis. Let's go back to the. But if they start trading positive, tells us we've hit a double bottom. Where do you think the next likely target is going to be? Probably coming back up to test the 50. All right, so if it does that, now you want to identify which stocks might have bullish confirmation. So what option strategies would you use at this point? Well, we might start out with calls, and if it continues up, then we add some call spreads to it. Tomb for double line. I don't know what that means. Tomb for double line. Tomb, nah. Phil, you're going to have to re-ask that. Yummy. Time. Oh, time for double line. Okay. All right. So is there any general questions on candlestick analysis? I guess my bottom line statement. Oh, you're in the dark? All right. Is that everything you see in a candlestick chart is merely common sense put into a graphic depiction. All we have to do is learn how to analyze what human nature normally does, and then you can take advantage of high probability trade setups. Turn the light. All right. I guess with that, Rick, go ahead and do the double line. And in 3.6 seconds, do the next double line. Costco, right now, if I was short, I'd stay short. And if I was short, I'd have my stop at the T line. If it comes up through there, that's showing too much strength. Same scenario here. If it opens positive, now you're back into this sideways mode with the possibility of heading higher. If it opens lower and trades lower, you stay short. FOBO, nothing. I mean, if you like it, you could be buying it, but you have to see some strength getting out of this range. And plug, maybe a belt hold signal. Once again, if it opens lower, you stay short. Lennar, stay, whoops, no, that's also one that took you back up into the trading range. If you were short on this one and you stayed short after coming back up through this level, it has to open lower and trade lower to stay short. Kind of the same scenario here. If you didn't close this out, if you were short, if it opens positive, I don't know whether you could be short. I wouldn't be buying this one until you see bullish confirmation well above the T line. There's tons of stocks today that did bullish engulfing signals. Now you have to see whether they're going to confirm. And the ones that confirm the best, meaning if they gap up, those are the ones that you want to go after because that means everybody's coming back into those with great enthusiasm. The stocks, same thing. If it opens positive, watch. If you were short, I'd cover the short if I was short, and then just watch to see what happens at the T line. AMGN, stay long. That's a toughie on this one, Carrie. Yeah, they've got not so much a bobble breakout because a bobble breakout, this uptrend would have failed right at that level, but you do have the prospects of a J-hook pattern. And Suncor, now that's even better compelling. This one you could buy on positive trading. Want to see it, make sure it gets up through this level. On the SPY, same analysis as the other indexes. If it opens positive, they're probably trading positive. If it opens positive, you could be buying with the idea that you wouldn't want to see it come back down through the T line. DraftKings, you get ready to cover this probably above the doji. If it has enough strength to get up through there, they're bouncing up to the T line. Right now, if I was short, I would just stay short. Looking for lower trading. MMI, this one you could buy on positive trading. Rivian, nothing. Kind of a nothing chart. I wouldn't be long or short. No direction. Let's see. What are the, I've never pulled up the Dow Utilities, have I? Dow Utilities. There's your piercing signal. Same thing. If it opens positive, you want to watch to see what happens at the T line. Remember, anytime you see bullish trading, You still need to see that confirmation up through the T line. ENVX. ENY. No, VX. Same scenario. If it opens positive, it's in this sideways mode. If I was short, I'd cover the short position. Again, anytime you start seeing the probabilities going against you, remember there's 9,500 trading entities that you can easily scan to find the best trades. If you've got something that looks iffy, there's always something out there that's going to show a good strong chart. Fold, nothing wildly exciting on this one. If you're long, you can stay long. At this point, it's got to get through this level and the 50. Johnson & Johnson, not a big trader, and that's kind of a nothing chart. Unless they break it through, that's just a lethargic chart, and that's basically due to the fact that it's an institutional trader. Southwestern, setting up for a J-hook pattern. If you're buying this one, watch to see what happens once it gets to the 50. We did Costco. You stay in this short until you see it close above the T line. Revlon. Oops, there's your reversal. You can buy this one on positive trading and then don't let it close below the T line also. Cisco, same thing. You're buying on positive trading. Again, the positive trading is going to be a function of how they open the markets tomorrow. Okay, that was on which one? Where did I put? And then that stopped out. On Zeus. All right. Today I bought, and got stopped out with 50% loss on the 135 puts. October 14th, which expires tomorrow. Whoops. Options 14 October. Which ones did you do, Rob? You didn't do anything wrong. You're just at the mercy of the market making a strong reversal. So the fact that they opened lower and traded lower down through this level was a good trade. But then when you saw the market reversing, that's where you have to say, oops, don't want to come back up into this area. So if you stopped out with a 50% loss, nothing you could do about that. Hopefully when you put the trade on, you were looking for something that was going to be a 2, 3, 500% upside. And Merck, just stay long. ATAX, that one you could buy. It's not anything real wild and exciting, but you can see the slow curve. Just be aware that your percentage return just to get back up into the congestion area isn't going to be all that fantastic. Short covering strategy, yes. If this opens positive tomorrow, you cover your puts or your put spreads or your short position, because if it opens positive after that belt hold bullish engulfing doji hammer, where would you be? You're right back up in this area. The probabilities are going against you. To stay short, you want to see it open lower and trade lower. And even if it opened lower and traded lower, where would you put your stop? Probably put your stop right there. But if they traded lower and then came back up through that level, what's that telling you? This whole level here is where they're buying with another buy signal. This is a junky chart. That I would not be long or short. Just no direction to it right now. Oshkosh, left-right combo. Nothing fantastically great, but if you like it, you can buy it. You just have to watch to see what happens once it gets to the 50. AEHR, same scenario. Ralph, I probably wouldn't go long until it comes up through this level. Ken, the T-line is the 8 exponential moving average. It acts like a natural support and resistance level of human nature. And when you combine that with candlestick signals, which are the graphic depiction of investor sentiment, that combination is extremely high probability trade setup. Match, stay short. Wave 1, wave 2, wave 3 in progress. Is that an inverted hammer? No. An inverted hammer happens where? Down at the bottom when you're in the oversold area. That's just a sell candle. Remember, a signal is not a signal unless it's occurring in the correct conditions of the market. Tell, if you were short, I would have covered it today. I wouldn't be buying it just yet until it gets up above the T line. Very sideways. An ALT, if you were short, would have covered the short either yesterday or today. Wouldn't be going long just yet. I was at the 8 exponential. Isn't that how you say it? Local vernacular, I guess. Statistics call it exponential. I can even say that one. All right. Again, keep your Saturday open on October 29th for a full day analyzing the simple trading strategies. They're going to be simple. They're not going to be the iron condor or the butterflies, because everything we do is we want to analyze very quickly what the investor sentiment is doing and then put the appropriate trade on. Okay, that's about all I got. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.